Yeah, good day trader. My name is Vasco Smart FX. Welcome to my YouTube channel. So, topic now, we are talking about the gold weekly profile, and the objective of these videos is to let us understand the structural patterns of gold weekly activities. So, there's a structural patterns that gold showcase in weekly activities. So now today's video we are just trying to talk about the gold pattern or the gold structure pattern weekly. So before I get started, I would like us to talk about two things, because these two things are tied to we understanding the gold weekly profile. So the first thing is called the displace, or something we can call the displacement. And the second one is called the concept of liquidity. So now, but let me start with the concept of liquidity first. We all understand what concept of liquidity is, whereby we all know that the forex market itself is just an iota of liquidity seeking. So now, the concept of liquidity now is talking about in the aspect of gold weekly profile. Now, the concept of liquidity is talking about that if we have, let's say for example, now let me zoom in now. That this is a weekly chart, this is gold weekly chart. Each candlestick represents one week of the gold pairs. So what the liquidity concept comes in gold is that for any candlesticks of gold that is coming up, there is a liquidity seeking that is after. So we need to understand first from this weekly candlestick that what is the liquidity seeking and what is our order flow. Are we bullish? Are we bearish? So now, let's say for example, you see this candlestick now, weekly. This is a weekly gold weekly candlestick. You see the candlestick close. Let's say assume that we didn't know when this will come up. We see this candlestick close. We see the whole lot of wick in this candlestick runs out to this extent. So let me draw the break of structure here. So we see this market took out the previous week low, then it runs up. So let me explain the two things here. Number one thing I will explain now is the displacement I talk about, or something I call displace. You see now, I have a range. Let's say we have this range of this candlestick here. I have both the high and the low, but this candlestick comes down here and took out the low of the previous week. Then from here that it took out the lows, it displays itself inside back the range. You see, it enters the range back. It didn't close outside the range, it enters the range back. So we have this limit, or we have this range from the high to the low. So this candlestick comes outside the range. It took out the liquidity, then it displays. So the displacement now is talking about the wick, that the candlestick wick from here to here. The candlestick wick is still back into the range. So what this one is talking about is that market now wants to go bullish. Okay, now for example, now let's take out the mentality of the displacement out. If you come into a chart now and you see this kind of wick, now, then you see market took out liquidity, then you see this kind of wick now, you'll be expecting that, okay, let's see the kind of bullish market inside this market. The next candle is to come, let's see the bullish market. So now my objective now says that this is my objective. I have explained the displacement, which means displacement means that market displacing itself back into the range. But if market didn't displace himself, it will be outside the range. Now the liquidity concept now says that when the next week is coming up, I want to see market taking out the liquidity above this candlestick. I hope you understand. So that is the concept of both liquidity and displacement. So since we have our perspective that, okay, we want to see market taking out the liquidity above here, then we can now come down to daily, then 4 hours, then you cannot structure ourselves to that liquidity aspect. So but you need to understand where your weekly want to take out the liquidity. That's the first thing you need to understand when you are looking at the gold weekly profile. So now let's go down to daily now. Let me draw this chart down so that this is where we are going to study. We are studying this guy. We are studying from this chart here. Let me put out blue and 4. Okay, we are studying this and this. So we are studying this opening here. We are studying. Okay, let me put it here. So we are studying from this candlestick to this candlestick. Let's put our liquidity. So this is our where we are. This is our liquidity we are looking for. Market is in the range of this and this. So now let's go down to daily charts. Then you can see what we have. Okay, now this is daily chart. You can see Monday, Tuesday, Wednesday, Thursday, Friday. So now let me demarcate. We have 2 weeks now. So now let me demarcate the first week. So this is the first week that we have here. So which means that the first week that we are looking at the liquidity on top, this is it. So the second week that we want market to take out the liquidity, this is it. So now we are having 2 weeks now. So this one will give us okay. We're starting from this guy. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah. So now this the where I said we want to see market taking out the liquidity, and this is the week that we want to see market taking out that liquidity. So now as I taught you the first time, I taught you displacement and the liquidity concept. Number one is that we understand where our liquidity is for the coming week, which is this week here that we have here. We know where we want to see market taking out the liquidity from. So the second thing is called the displacement concept. So we need to understand the whole totality of displacement concept from the daily time frame. So we need to understand the totality of the displacement concept. So as I said the other time, that displacement concept is just talking about market closing outside the range or inside the range. So now let me give an example. Let me find an example, then you can just move out with it. Okay, let's say, okay, I think let me just run some examples. Okay, now let me use this candle as an example. We have this range. This market opens there. We have this range 1 and we have the second range 2. So this market, the second candlestick, which is the daily candlestick, it comes up, then it took out liquidity below it, but market did not displace back into the range. So which means that market is outside the range of this high and low. So the next thing we want to see is that you want to see market continue selling, which means that the low of this day is our target. Now look at the second one also. Okay, now let me use the second one also. We have the low and we have the high. So now look at this now. We have the low, we have the high and the low. So the next candlestick comes in up, it took out the liquidity below it, and it couldn't couldn't go back to the range, which means that it couldn't displace back into the range. So we are still outside the range. So I'll be looking for liquidity where? I'll be looking for liquidity below this candlestick. So that's where that will be my target for liquidity. Like I want to look for liquidity below that candlestick low. Now you see the second candlestick that opens, it traded back into the range, but it did not take out the liquidity above it. So which means that let me draw the new range. So this is the new range now. We have our so we have our high and low. So you see now this one, it did not break anyone. This one, so which market only traded inside the range, like it didn't take out any liquidity. This called a rangy day. It's next day that comes up, it took out our targets. So that is the concept of now let's go back to our normal trading now. The concept, since we understand the displacement concept now. Okay, now so this is it here now. on what you are trying to talk about. So we all know that this line here is the high of that we are talking about, the range at which it was, and this here is the range at which it's the other candlestick is. So now this is it here. Now we are looking for this liquidity, right? On Monday now, market trade above this candlestick here for market range inside back, but we know where our liquidity is. Now this is it here. This the whole of the gold weekly profile. Now let me try and explain very well. Now the weekly profile is it is either we have our eye of the week forming on Monday, forming on Tuesday, or forming on London section on Wednesday. Our Thursday can be the low of the week. Thursday usually comes as lows or high of the week. It depends on the other flow. But Thursday is actually coming as low or high. So if Monday is high, Thursday will come as low. It depends on the patterns that it is giving you. Now look at this now. The main focus of this current week, is that we want to take out the liquidity above this previous week, because I have explained that for you on the weekly time frame. Why this zone, this zone 1933 level is a liquidity zone, or is where market makers are seeking to take out liquidity from. I already explained that for you on the weekly time frame, right? So now this daily, now I already explained the concept of displacement. So which means that we need to understand the concept of displaced. So when you understand what displaced is, so now we see Monday trade. Monday trade is just it's what you call doji, yeah. So we call it doji. So which means that it is no. We said about doji. What you are trying to say is that we are trying to talk about indecision. So which means that there is indecision between the buyers and the seller. You can see it now. You see market wicks like just in the middle. So this is what we call a doji. Now on Tuesday now we have a trade also. It's traded inside that range. So like Monday and Tuesday, if you go down to lower time frame, you will see them as a consolidation days. They only consolidate. So like there is no trading at all. Okay, now let me draw the range so we can both see very well. So now this is the high of Monday, and this is the low of Monday. You can see it here. It weeks to this place. So this is the low of Monday and the high of Monday. Now this traded in the range of Monday. Like there is no liquidity being taken on Tuesday, but we know that this is our focus. We want to see market taking out the liquidity here. Now you see on Wednesday comes there, then and displaced. You can see the kind of displacement is displaced. So which means that, let me put this the range on Tuesday now. Let's say our focus now is on Tuesday, because I think Tuesday has traded. So now, yeah, so it's now on the low of Tuesday. So this is the high and the low of Tuesday. So now Wednesday comes and took out the liquidity there, then and displays itself back. Now see where it displays itself to. Now the question is this Thursday displays back into the range? No, it didn't displace back into the Tuesday range. So which means that we want to see Thursday to be a selling day. So this is the pattern at which the gold weekly profile works. We have our liquidity targets, and when the liquidity was taken out, market traded outside the range of the following day, which I call that displacement concept. So when Wednesday traded, it didn't trade back into the range. So you want to see sell. I want to see this low being violated. I want to see Thursday being traded low. So when Thursday traded low, it took out the liquidity and traded low. So now Thursday will come to my perspective as the low of the week. I don't want to see Friday going below Thursday, but that is just a theory. But we need to look at what the trading is doing. So some people always say Friday is a resting day, but just look at what we are doing on Friday. But that low should be a saving place for you. That okay, Thursday is the low of the week based on the trading pattern. So now you can just check out more examples on it. I'll be dropping more examples actually. I'll drop more examples on it. So you can just check out more examples. And any question you don't understand, just drop it on the comment sections and I'll just attend to it. But this is the view patterns on which gold traded itself on the weekly profile. This is just, if you look at the weekly profile this way, number one, you need to understand the order flow of that week from the weekly chart. Number two, from the weekly chart, you need to understand where the liquidity is resting from the weekly chart. Number three, you come down to your daily, then you do the whole analysis on daily, what and where you want to see market. Then you come back to 4 hours, then 1 hour to enter any of your trade you want to enter. So I'm just talking about the weekly profile, and this is it. Every week has accumulation, manipulation, and distribution. So this can serve as a manipulation when market took out the liquidity. Then this can serve as the weekly distribution. What you want to see the weekly doing. This Friday is just I don't know. This Friday, sometimes Friday actually acts anyhow. You can see how it goes up a lot, and next day just comes down like that. I think there was a news here on Friday. Friday actually acts very strange sometimes too. So some people actually advise that don't trade on Friday, but trading on Friday sometimes is actually good also, because you know that Friday we actually retrace back the distribution that's occurred. If market distributed on Wednesday, Thursday, or Monday, Tuesday, Wednesday, Thursday, Friday we trace it back. Like, it means that market makers are not there anymore. All the orders have been withdrew. So when the orders have been withdrew, then the trade can retrace itself back. So that's what Fridays usually do most times. So this is it. Thank you very much for watching. Don't forget to like, share, and subscribe. Let's grow the community very well. Let's go. More is still coming. I'll make more examples and how you can trade it on 1 hour and 15 minutes. I'm going to do that in the next video. Thank you very much. Don't forget to like, share, and subscribe. Call more of people into my channel. Okay, if you want to join my Telegram channel, just about gold, you can. There's a link in the description. Click on the link and let's make money together. Thank you.